Too many alerts going off now. I'm gonna have to turn that thing off. Let's see. Oh, nice. This could be up a nice buy entry if it closes. Man, this market's moving weird. It moves too fast. I need to slow it up real quick. And then we should be good to go. Let me grab this link. Send it over to the guys. All right, cool guys. Let me see if anyone's even in here. Hey, what's up, Billy?
Hey, what's going on, Shawn?
Doing good, bro. How are you?
Doing all right. How's everything?
Nice, nice. Everything's been pretty good, dude. The market's like just been slow this week because of the holidays. But I'm pretty sure it's gonna pick up like, you know, in the next 2 weeks once the new year starts. So I'm just chilling for the most part right now. But overall, it's been good. How about you? You ready for the holidays?
Yeah, man. I'm ready as I'm gonna be. I'm actually in the tow truck right now. I'm working.
Oh, really?
Yeah, I'm on the road right now. That's why I was like, I'm headed. I got like another 5 minutes or 10 minutes, so I gotta like take like a 5-minute break to unload this car. But then I got like an hour drive, so I'm like, it worked out perfect to get on here.
Oh yeah, no, definitely. You just sit in, you know, just hang out for a bit, see what's going on. It's kind of better that we're doing it this way, you know, all of us all together, so we can kind of get everything out of the way all at once. Let me see where Kyle's at. Did Kyle send you this link? I was trying to figure out where Kyle and Joey are.
They're still not on. Let me check some.
Yeah, it's all right.
I have his Telegram, so when you sent it to him, like I could read everything. So like I got his Telegram on my phone also, so we like share.
Oh, gotcha. Okay, that makes sense. Yeah. So that's why I got like a message from Kyle, or it was probably from you, and I thought it was you in the YouTube. That's why I was laughing earlier this morning because I was like, is this Billy or is this Kyle? I thought Kyle was just using a different username. I'm going to mute these. Mute that, mute that, mute that, and that. Give it some time. Notifications here. Damn, I'm getting all these alerts. Mute this stuff. It's weird. I thought I muted these. All right, cool.
Yo.
Cool. What's up, Joey? How's it going, bro?
Good. How are you doing?
Doing good, man. Just chilling, hanging out. Market's been slow, so I'm pretty much just hanging out until next year, basically.
Dude, I was listening to the webinar, and I missed you when you went over the new strategy, but I caught the end where you were all excited.
Oh yeah, no, definitely. Yeah, did you see it? The new strategy?
No, I didn't catch when you were going over it. I just heard, I was listening like in the background. I heard you just like win. I could trade oil. I could trade gold.
Yeah, dude, it's pretty crazy. Like, I don't know why I've used something similar to it, but I never really thought about this until yesterday because another guy I had a session with him, and then he wanted me to help him with like another strategy. And then this just like popped in my mind, and I was like, wait, this actually works. So I went and I looked at different pairs, and it's literally like the win rate's just crazy. And if we tie that in with our US 30 strategy, it makes it like almost like above like a 95% win rate. So it's
Nice.
it's pretty crazy. Like I'll show you real quick. You're on the computer, right?
Yeah.
Okay, cool. So I'll show you real quick like how it works. Basically, it's really really simple. So if you get a signal, you know, like an opposite signal, a buy signal, you basically just want it to cross above the previous signal. So like right here, we had a sell signal, right?
Uh-huh.
So right here, I just put a line there so you can see that when price crosses it, you'll know. So like right here, price crossed it, and then it closed with a buy signal, right? So in this situation, you would just enter a buy entry, like a long position. You'd place your stop loss like slightly before the like below the swing, and then you just pretty much just let it go, and then it hits like full TP like
Oh,
that.
wow.
It's crazy, bro. And then like again right here, there's another entry at this buy signal right here. Same thing again. Basically, I just put a line right here so you can see where that sell signal was, and you can see that the buy signal like slightly crossed it, like not a lot, not by a lot, but it crossed it. So like right there, if we were to do the same thing, enter another long position, it ends up going pretty much straight to let's see if this runs through.
Oh, nice.
There you go, straight to full TP right there. And it's crazy simple, dude. Like I don't know, I never thought about this before. This kind of like takes all of the other indicators out. You really just need the momentum indicator. And I was literally just running this back and forth. Like that was an entry there. And then again, right here, there's like another one on this buy over here because it closed above this this sell. So there's like a line right there. And then it closed above it. So you can enter like another buy.
Oh, it's got to be opposite, right?
Yeah, opposite. Because each signal is basically, it's going to be a red one and then a green one. So as long as it crosses it, it kind of gives you a hint that like a breakout's going to happen next. So, if you line it up like that, it hits full TP again right there. So if we took all of those 3 trades right there, that could have been like 800 pips. We got another one right here for like 800 pips. We got another one right here for like another 800 pips.
Oh my God.
So dude, it's like 3,000 pips within like a couple hours, dude. And that's like $3,000 if you're trading like a mini lot. So this is this goes hand in hand with the daily entry, because what I was trying to do, like my main goal was to figure out how to prevent these losses. So I did like a little back test, and I was like, how do I avoid these? Because we're still in profit for December. Like we would have been in profit like an overall 9,000 pips, but I was like, I want to erase these losses right here. So that's what I did. I went back and I figured out that there was like a little pattern that showed up. So by using that, we could eliminate all these losses right here, and we have more.
Oh, you actually checked like those calls or whatever based on this strategy?
Exactly. Yeah. So I was checking all the possible entries that would have happened, every day this throughout December. And I was, we're still in positive, but I was like, man, I want to make more profit. I was trying to figure out what can I do to like fix that issue. So that's pretty much what I did. I just went back and I saw some patterns, and then I added it to these losses right here, like just like basically avoiding the entry if this doesn't happen, where it's like above the previous signal.
Yeah. Okay.
And it avoided me from taking these losses, because if I go back to the 7th, where we had that loss, it was like, let me see right over here. Yeah, so this is the 7th right here. If I put the like a vertical line somewhere, and then there's like some adjustments that I still got to make, but obviously, this is just it's like a work in progress basically. So right here, we wouldn't have taken this, or actually, no, we would have taken this invalid signal right here. So this is another variation to it. So instead of ignoring this signal right here, I'm just going to rewind this candle. So, generally we usually ignore it if it's an invalid signal.
Yeah.
But right here, since this closed like way below this this buy signal, this would be considered like just like a small retracement. So instead of ignoring this right here, we could have just put like a sell stop right here at the bottom, and then basically catch it as it comes back down. So if we did that right there, we could have caught it as it came back down right there, and then it would have ended up hitting I think TP eventually. Let me see.
Oh man, I would have been freaking out in this trade.
Yeah, because you would have been holding this for like way too long.
Yeah.
So I probably wouldn't have held it for that long. But if it would have hit like some profit down here, I would have just closed it out.
Yeah, true.
But I was like right there. If you held it long enough, it would hit full TP. So I kind of figured out this little pattern right here when I was testing it. Because what happened was we skipped this entry, and then we went for this one right here, and then this ended up reversing on us. So like going back to that same little thing that I figured out, like if we were going to take this right here, we would have just skipped it because the high of this sell candle is way up here, right? So that buy never crossed it.
Oh.
So it gives us that little confirmation that, we should have never taken this because it would have to cross it.
Oh, nice.
With that buy signal. So if we did that, we could have avoided this one loss right here. And then that would have been like another 1,500 pips in profit rather than, a 1,500 pip loss. So
yeah, I got killed yesterday, dude.
Oh, man. Yesterday, it was like, I knew it was going to come up. Like when I was telling you guys to remove the stop loss. And the thing is, it like barely triggered a stop loss. Like it was right here. And I think our stop loss was like right here. Man, because Trump sent out that tweet. Or he, had that announcement or whatever when he was like arguing the stimulus, because the stimulus was supposed to help US 30. So I was like, all right, it's gonna come back up. But as soon as Trump made his little announcement, it just like priced down, hit a stop loss, and then it did exactly what I thought was gonna happen. Shot right up.
I had the stop loss set even lower because I'm yeah, because I'm like, because I know you said you were like, I'm gonna put my stop loss back in, and I forgot to do it when you said it because I watched it, it was shooting up, and I'm like, whatever, it's shooting up.
Yeah.
Then the next time I checked, there was like a huge spike down. It went to like 8. I think it was like 820 or 8. No, that was FTMO. I think it was like 860 on the regular. And that was where my stop losses were set.
Bro, you missed it by like 15 pips.
I know. Oh, I know, dude.
Yeah, man.
I looked at it just early, a few minutes ago, and I'm like, it figures that it would go back up.
Yeah, exactly. I was like, man, hoping Trump was not going to say anything. I was hoping he was just going to sign off on it and then just let it be and then let it shoot up. So exactly, like right after that happened, he, it shot right back up. I was like, damn, we really got fucked over by that one tweet that he sent out. I mean, it's all good. It happens, like in these situations, like we didn't know that this was going to happen right then and there. It could have dropped even further.
Yeah, that's what, I figured when it hit, I'm like, at least I didn't go any lower.
Exactly. I mean, it would have been nice if we just held it, because let's see, if we held it from right here, damn, bro, it shot up like 4,000 pips. God, this would have hit our full TP, man.
Oh, shit.
Crazy. Yeah, I mean, it's all good. We'll bounce back from it, especially with this new addition to the strategy. It'll definitely help out a whole lot.
I got, see, the only thing I'm worried about is my FTMO. I started it with those 2 losses, those 2 last calls.
Oh, gotcha. So, how far down are you right now? You should probably be down maybe 4,000, right?
Down more than that because yesterday it was
lower.
Yeah. I'm at 94,500.
All right, so you should probably just lower your lot size. So you're taking a 15 right now, right?
Yeah.
So lower that to 10, and then once you start getting higher and higher, like probably once you get above like 9,600, then you can go back to 15, because then at that point you can bounce back pretty quick after like a few trades.
Okay.
So I think that would probably be the best option right now. And then you can slowly increase. You don't have to go from like 10 to 15. You can probably go from like 10 to 12, and then once you're above 100,000, you can go back to 15 lots.
Okay.
So we'll keep in touch with that. But I think right now we should probably just be a little careful. See how many days we have left in the month. We have, I think next month is New Year's, right? Yeah.
Yeah.
Yeah. So the year following that, it's gonna. I mean, the week following that, it's gonna. I think the volatility will pick back up because people will be hopping back into the market. So we should be good.
Nice. I'm kind of glad you didn't call anything today because I think my daily loss carried over from yesterday.
Oh yeah. You held it for like an extra day, right?
Yeah. So I didn't know how much I could actually. I think it was only like 1,000 or something.
Yeah,
1,500 or 1,700. I forget what it was. Yeah.
Yeah, that entry came too late. It was like right here. So I wasn't gonna call it anyways. I think it came at about 11:20. That's way too late because the market starts to swing the other way. as we enter, the Asia session. Yeah, so I probably would have avoided that one, or you could have scalped it or something.
That would have been TP1, right?
Yeah, I would have been one around here 750. So technically, it would have been an okay trade, but I think it just would have been too risky because we would have held it into the next day, and I just didn't want my my daily loss to carry over. That was the same situation as you. I took the one before and then yesterday, and I was getting close. I think my daily loss was at like 4,500. So I was like, damn, if I went over a little more, I might blown it or like fail that requirement.
Yeah.
Yeah, definitely. Oh, Kyle's here. I didn't even know Kyle was here. He just sitting in the back, hiding.
No, I was trying to get my mic to work.
Oh, there you go, bro. Yeah, I just pulled up the list. It looks like Billy got disconnected. I think he was at work right now.
Oh, Billy's coming on here too?
He was actually the first one in the room. I think he was towing a car right now. He said he was going to drop the car off and then hop back on.
Oh, word.
Yeah.
Got the whole squad over here, the Jersey squad.
Right? Yo, I didn't know that Billy had your Telegram, dude, because like he was messaging me on Telegram before through your Telegram. And then I was responding to him on the YouTube. So I thought you were the same person the whole time.
No, that's one of my friends.
Nice, dude. Yeah, Billy's cool. Yeah, dude. Yeah, man, strategy is crazy. Like once I start applying it, I think we're gonna have like the win rate for US 30 just gonna be even higher because I back tested all of our losses from like December and November, and we probably could have avoided like all of these losses right here.
Wow.
So I'm pretty excited for next year, bro. Like I think next year is gonna be pretty back to back with the win.
I can tell, man, because I was listening and I heard you like, I could trade oil and gold. It doesn't matter. I'm like, oh man, what did I miss? And then when you were,
yeah, because we had a guy in there. It was there's a new guy that joined the group, and he gave me like a random asset, like it was like CL1 exclamation, which is something I never looked at before. I was like, okay, cool, and I didn't think the strategy was gonna work on it, but once I pulled it up, it was like, dude, like everything hit, and he was telling me that each pip is like worth $10. So I was like, fuck, dude, like you could lock in like some crazy profit off that. He showed me this one right here, CL1, and I guess since it's it's a futures asset that he like each pip is like worth $10. So like we were locking like 40 pips for like, let me see how much did it move from here. Yeah, we're locking like 40 pips. So each trade was like $400, $500. And then we were having like back-to-back wins like nonstop. So I was like, yeah, maybe I should hop back into futures. But I don't know. We'll see. I'm just excited for next year, bro. Because now that we have this new strategy that I'm developing, it's just going to open up for more opportunity basically for pretty much everything.
Is it only 10-minute or?
No, it actually, it works on everything. So like on the Forex pairs, you could scalp on it as well. But I think me personally, I'd probably use it on the higher time frames. Like something like, let me see if I can find an example here. Let me go to a clean chart actually. Yeah, so if I'm looking at like, I noticed that it works very well on the JPY pairs. So like, for example, here, this is like the 30-minute. If I back up right here, and then we do the same thing, I just mark up the high of that sell candle right there. And then obviously this buy signal right here would be right above it. So if we were to enter like a long position right here, and then that's about a 60 pip move, and we let it run, and then it goes straight to the TP right there as well.
Oh wow, look at that.
So this is like the 30-minute, and then if we wanted to scalp it like on the shorter time frame, like a 10-minute, it works like, let me see if this matches, not this one. Let me go to this one right here. So like this one right here, again, like same situation. We just mark up the previous sell, which should be down here. This buy closed above it. And then if we take a long position right here, you can scalp it for like maybe a smaller move for like maybe 30 pips. And it works pretty well. I mean, there's going to be different variations that we need to, make to the strategy first to figure out, what works, what doesn't. But just looking at it from a basic standpoint, it hits. So it's something that I wouldn't mind, testing out. So I'm definitely going to be using it because like this would be a win. This would probably be another scalp win right here. because this buy was above the sell. Another win there for like 40 pips. And then this one again right here, this buy was above the sell. So that's like another win for about 40 pips. And you can literally just keep stacking these little scalps right here.
When you scalp on the lower time frames, do you have like a pip goal in mind? Like,
yeah,
like
exactly. So yeah, that's like one of the things I need to work on too for Forex, because I used to scalp Forex a lot before. And then I went from Forex to scalping like US 30. For US 30, my goal is like 500 pips.
Okay.
So for example, let me just show you this right here. Oh yeah, so like this entry over here, I generally would try to go for like 500 pips because I know how US 30 moves. So like right here, if I was to go for this one, I'll just go for about 500 pips, because for like something like US 30, it moves really fast, so you can get in and out of these trades pretty quickly. So like right here, 500 pips. I went straight to TP. Again, right here, this would be like another 500 pip move right here. I mean, obviously you can go higher, you can take off your TP, but if you're scalping, I'm trying to get the trade. I'm not trying to go for those home run hits. I'm trying to just go for quick win, get out, look for the next one, quick win, get out.
I'm trying to work on that. It's hard.
Exactly. No, it is. It's really about like, trade psychology, because the thing is, once you start to see the profits coming, you start to get greedy. You start to think, oh, what if I let the trade run?
Yeah.
Exactly. But if you're scalping, like, it's easy for you to hit like 500 pips right here, get out, enter on the next entry right here, another 500 pips, get out, and then enter again right here. So that'd be like 1,500 pips within, let's see, within like, I guess like 11 hours, which is like not that bad, because if you're doing like I guess a mini lot, that'd be like $1,500 in profit, and then if you're doing like a standard lot, that'd be like 15,000 in profit.
Wow.
If you're doing the FTMO. So,
and this is the new strategy, right? Or
yeah, exactly. This is the new strategy. The only thing with scalping is that you add more risk if you there's more room for mistake if you take too many trades. So I probably would scalp like all day. I would probably just scalp maybe during London session where like the market's actually moving, and then again during New York session. But I probably would sit out during Asia session because the market's just too slow. But
yeah, I noticed that last night.
Oh yeah, you're like holding on to the trade for like hours, right? It doesn't even move.
Yeah, it was last night when it started shooting up and then it shot back down. I kept watching it and it was just kind of going sideways for at least a couple hours, I think, or maybe an hour or two.
Yeah, exactly. So I think like your time lunch, so like probably lunch until like late night, it's just like really, really slow. I think the Aussie market opens about it closes from like 1:30 to like 4 p.m. my time. So that'd probably be, I think, maybe 3 or 4 your time. So like around that time, market's closed, and then all throughout the afternoon it's just like super slow. So there's like there's no reason to trade during that time, because you don't want to get caught in a trade where it's pretty much just going sideways, and then all of a sudden London opens and it spikes up either in your direction or against you. You're kind of just gambling at that point. It's like a 50% coin toss. Yeah.
Hey,
So
I don't know what Kyle wanted to talk about, but I kind of have a question about the 4-hour strategy.
Yeah, sure.
If you could just pull up like a zone, just a couple, like a chart with a few zones.
Yeah, sure. So we got GJ right here.
Yeah. So, all right. So I'm reviewing the charts, right? So say you have a move up, and then it's coming back down towards a zone, right? It's like a support zone. It's coming down towards.
Yeah.
So the momentum is a sell, but you're hitting like a top of a zone, like any maybe on the 27.
Oh, 27.
Move to the left there, where it's right. No. To your right. It's keep going to your right. Keep going. Keep going. Keep going. Keep going. Keep going. Keep going. Like right there.
All right.
Right when you go up there.
This one up here.
No, when you come down before that move up, where it sat on that support zone down a little lower. There's that low of 138.282, the one to the left of that.
Oh, right here. Okay, I got you.
Yeah. So when you see that come down and hit that zone, right, you got your momentum. It's saying it's going down, but that's like a say a support zone. When would you take that? When would you feel comfortable taking that a long position there, or you wouldn't?
Oh, on this area right here.
Yeah.
So I personally wouldn't take it right here because the problem with this is, if I go and rewind this over here, the problem with this is, it does look like a rejection pattern right here, but there's really like no confirmation because there's a lot of things that can happen from this point. Like it can either reject off this point, come back here, and then once it gets to this point, it can do like one of two things. It can either break above here and continue up further, or it can reverse from this point and come back down to continue, this little downtrend that's happening right here. Because like in some situations, some people would identify this as a double top, like how it rejects off this point and rejects off this point. So you kind of have to see like how other people are thinking. If a lot of people are thinking that, then odds are that's probably not going to happen because the banks and institutions know exactly, they know all the market patterns. They have like their own algorithms that are identifying these things. And basically what they're doing is they're trading against everyone else. So like normally, other people would see this as a double top. So they'll probably think that price is going to come down from here. However, if we run price forward, it does a complete opposite and it shoots up from this point.
Yeah. So you wouldn't like, I look at that and say, hey, it's hitting that support and it's going to go up, right? But you're saying you need more confirmation. You can't just make that call, right?
Exactly. Yeah. Because if I rewind to this point right here where we didn't see this come up yet, at this point, there's still a couple scenarios that can play out. Like at this point, this can actually, it doesn't need to go up here. It can actually just drop from this point, or it can bounce off here. But the problem with this is we don't have a bullish momentum yet. So unless we have a buy signal like we do right here, I wouldn't take a buy yet because like using this, for example, over here, because this probably was a zone previously, a couple of weeks back. This was in November. So this was probably a zone here before the zone's updated. Like this right here. So if I rewind this right here, see, this could have been the complete opposite of what happened here. If you go over here and you see that rejection point up there, this kind of looks like it could shoot up as well as it rejects off this zone. And then it's followed by a strong bullish candle, right? This is like a classic pattern where it's, I think they call it the tweezers or something, where it's like, you see the wick, it's followed by a bullish candle, then a strong bullish candle. So this kind of tricks people to think that it's going to continue up. But I wouldn't take a buy here because I don't have a buy signal yet. I would wait for a buy signal to appear and maybe close above here before I take that long position. Because the thing is, if you took a buy right here, it would have went the complete opposite on you.
Okay.
So that's why I would wait for the buy signal for that confirmation, because there's really no guarantee that it's gonna, shoot up from this point.
Yeah.
Even though it looks like a really nice, reversal right here. Because it looks like it came up. It looks like it's establishing higher highs, like from right here.
Yeah.
Like a low, and then establishes a high right here, and then another low right here. So then from that point, most people would anticipate this to shoot up from here, probably break through there, but then it ended up doing the opposite. So that's why I would wait for the buy signal to have that confirmation before taking a trade like that.
Okay.
Yeah, because like looking back over here, the same area that we're looking at. So for right here, I would wait for this buy signal before taking that buy, because then once I have that buy signal, then I have that full confirmation, and I already know that price is probably going to break out from this point, because this would be the first hint. So the first hint would be the rejection. The second hint would be this bullish move right here, this bullish momentum signal upwards. So this is indicating that price is likely going to swing up. There's a couple confirmations. Confirmation one is that there's a nice rejection off this point. Second confirmation is that there's a buy right here. And then the third confirmation is that it actually broke a structure. So you have those three confirmations there indicating that, price is probably going to break out from this point. So once I see this, I would take a long position right here. And I'd probably ride it maybe to this structure, maybe even higher to this one up here. And then let it run, and obviously hit full TP at that point.
Would you take that without the signal if it just broke the structure?
If it broke the structure and didn't have a signal yet, then I wouldn't have taken it, because there's no confirmation that the momentum has already swung. Like the main thing with identifying momentum is to make sure you're trading with the direction of price, because you can see sometimes where you'll get a signal and then it doesn't necessarily push up right away. Like something like right here, like you get a buy signal, but it doesn't break structure, so it doesn't really shoot up like you would anticipate it to. But if I pull up the zones over here, there's probably a zone right below it. So you can see right here, there's actually a zone right below it down here. So right here, you can see that price actually broke the structure with a buy signal, and this is going to indicate that it's actually going to, shoot up from there. And then you can see it goes from this structure down here all the way up to here before, coming right back down.
Damn, that's a crazy wick on that one.
Exactly. Oh, this was November 3rd. Okay, so this is when the elections were going on. So we weren't even trading during this time, but that's why these moves are crazy. This is a crazy one. Drop from here all the way up here for about 300 pips. It's a crazy move.
Oh my God.
During elections, pretty much.
Yeah, I've been practicing my zones. Like every day I'll do a few charts and then I kind of look at it.
Yeah, it helps, right? Like when you have a zone chart, because you're able to really like picture things. Because if you don't have the zones on, it's kind of hard for you to really picture what's going on the chart when you're just looking at, candles move around. But when you have these zones on, and then you see every time price breaks structure, it usually like follows through with it, depending on how it moves.
Yeah, at first I didn't know how to like actually draw them, but after like the one session and then I just kept practicing. Now I'm like, I feel comfortable kind of, eyeballing which ones should be together and which ones to separate.
Oh yeah, definitely. Yeah, like that's really what it is. It's more so just practicing. The more you practice, the easier it'll get. Like you can see, for me, it takes me like a few seconds to draw these zones, but obviously it's just going to come with practice. It's basically because I do it every single day, so it just becomes second nature to me. Oh, here's Billy. Billy's back.
Yeah, he said to unmute him.
There we go, Billy.
Hey, can you guys hear me?
Yeah, we can hear you.
Hey, what's going on? Sorry about that. Hey, real quick question. I was just watching what you and Joey P were talking about before, right? As far as when you said like it bounced off that structure, you were looking at GJ before, I believe, on it was the lower time frame. Were you talking about the confirmation?
Oh yeah. Were we looking right here, or I think there was one right here, and then there was another one that was down here, I think.
It was the one that you said that he asked you if it, it was like there was no bullish confirmation, and then all of a sudden that green one shot up, and you said it broke structure. So right there, you would take it to up where it hit TP.
Exactly. Yeah. So like right here, Joey was asking if I would take the the buy at this point, but I would personally just wait because I want the extra confirmation. Like I don't want to take a trade that's like less than 50%, possibility that's going to shoot up. So right here, we still have the sell momentum. So I would have waited for it to close above the structure right here. And then on top of that, it has the bullish confirmation. So once I have that right there, I would take the long position from here and then pretty much ride it to the next structure, either up here or either up here.
Now, my question is that, that new strategy you're talking about where you said it has to, like the buy.
Oh, yeah, where it's above it, right?
Is that more effective on the higher time frames than the less? Because even though I see it worked out here, that buy signal is, it's obviously lower. So is that something that's more effective on a higher time frame?
I think it's something that's more effective on the lower time frame because you get more signals on the lower time frame. When you're on the higher time frame, the difference with this is that you'll have bigger swings. Like you'll have a swing that comes from up here, way down here.
I'm sorry. This is the 4 hour. Oh, I'm sorry.
Oh yeah. No, because when you're on the 4 hour, you don't get as many signals because the swings last longer. So like for the 4 hour, we're trying to catch the movement as it continues to move from like structure to structure. But if you're going on the shorter time frames, like say maybe the 30-minute, maybe even the 1 hour, but at best like maybe the 10-minute or something like that. If you go on the very short time frames, like the 30-minute, you could or actually let me go to a clean chart where it doesn't have all these zones on here. Or actually I can do it on here as well. You guys can still see. So like for example here, if I go back to this, let me see if I can find one that appeared over here. Yeah, so like actually go farther back. So like something like trying to find a decent entry. Okay, so on the 30-minute right here, it'd be, well, these zones are kind of in the way, but you can see here that price was above the this other candle right here, and this broke above it. So you could probably take a long position from there, and then put your stop loss at the swing. Should be about 30 pips. And then you can see that it actually works a lot better on the shorter time frames because you're kind of just trying to catch these little movements, not really the long movements. But from the webinar earlier, I did check on the daily, and it actually works really good on the daily. So I'm not sure, like I haven't done the testing yet to see if it works good on the 4-hour. It might work good on the 4-hour, but I might have to figure out, which assets it works really good on, because obviously I don't think it works on every asset, only on stuff that really moves pretty quickly, like the US 30 or some of the GJ pair or the JPY pairs, and maybe some of the like EA, EN, GA, GN. I probably have to just run through those and see what works good, because
I think I saw one on the 4-hour.
On the 4-hour, yeah, because obviously some of them have they have different movements. Like some of them will have a ton of signals, and if you have too many signals, that's where it gets kind of choppy, because you're not going to be able to really identify what's a good swing and what's a false swing. But
yeah, right there at November, and then the 4 to your right.
Fourth right
It's
here.
a false buy, but it's over.
Oh yeah. So I guess it does work. You just have to figure out where's like the sweet spot for it. Because like for right here, if we got this false signal, like I was mentioning, if this happens here, if we're applying this specific strategy, we wouldn't ignore these false signals. What we would do is we would just place like a buy stop right here at the high of this candle, so that once price actually swings up, just put that right there. It's about 120 pips. Once price swings right back up from where it was, because sometimes this is like a smaller retracement, and then as soon as it swings up, it'll fill our order, and then we can write it to wherever it goes. So like right here, price is still below, hasn't filled it, and then all of a sudden it fills it, and then we catch that breakout before it even happens. Huge breakout right there. Right?
It's money.
So, yeah, it's money. So the thing with this is this strategy is more so of a breakout strategy. It's you're basically just trying to time it where you're gathering these hints. So these hints here are basically like these vertical lines here are indications of swings of momentum, right? So the thing is, if momentum's past the previous swing, odds are it's probably going to shoot up from that point. So we caught that momentum before it actually charged up. So we're basically just like a sitting duck. We're just waiting for this to actually happen. And then as soon as this candle comes up, shoots right up and hits our TP. Let me see if there's another example here. So even right here. So same situation over here. We've got this buy signal where the low's right there. I put a line right here so you guys can see where it crosses. So this is just indicating that price has swung up, and then it's swinging back down. And then since it's crossing past the previous signal, it's going to indicate that a breakout's probably going to happen next. So right here, I put a short position right there, since we're on a valid candle. And then this would probably be like another 120 pips right there. And then if we run it forward, you can see that we kind of catch the breakout before it happens, kind of go sideways a little bit to basically trick people. Like the market's always going to play games. It's going to move sideways. But the thing with us is we have these vertical lines. Like we know where the momentum is going. So we don't get faked out by these little fake outs right here. Because you can see it went sideways for about, let me see this candle right here. It went sideways for about, okay. One thing for this too, that I think this was on the weekend, right? Let me see, 23. Yeah. So this actually happened on the weekend. So we probably wouldn't have taken this trade, but we'd be holding this for about, for about maybe 16 hours before it ends up filling our position and then coming straight down, because we catch that momentum before it actually happens.
So real quick, I don't mean to cut nobody off. How do you, like I noticed, like obviously with the US 30 strategy, you have your stop loss and then you just let it eat. How do you decipher at what point? Because like I noticed, like, because I'm always bothering Kyle, like, dude, this guy's a genius. I back test constantly. And I'm like, look at this. This is 12 wins, 2 losses. And he's like, bro, how many times are you going to tell me that? I know. I literally tell him every day. But my thing is like, I notice sometimes when you're like, oh, you put your stops to break even. But a lot of your trades, even though they might hit TP1, sometimes they'll dip back below break even before they make that shoot up. So how do you decipher when to put that break even and when not? Because if you know what I mean, like a lot of the trades, if you were to put them to break even, you would miss out on those wins.
Exactly. Yeah. So like, I'll just use this trade right here, for example. So like for this one right here, I'll just mark it up again how I had earlier. So for this one right here, generally the way that I trade, I I have two positions running. I have twin positions. So that's why I don't really mind it too much when I move my stop loss and profit. So like, for example, here, I probably have my, my TP1 somewhere around here, and I'd have my TP2 at 50%, or 50% somewhere around here. Basically what I do is for one of my positions, when price reaches TP, that's where I move my stop loss. So say right here, price comes down, like it hits TP1 right there, or I'll move on to the next one. It hits like TP1 right there, right? And then it pulls back. So at that point, it stops me out of my first position. So for that, I've already locked in 25% of my profit. For my second position, I just let it run a full TP or stop loss. So I already made profit on that one. And then my second position, I'm running to full TP. So instead of just reaching, you know, 1%, like times one profit, I'm locking in, like in some instances, you know, 1.25, maybe 1.5. And then if it ends up hitting straight to full TP on both positions, I end up hitting like double the profit. Since our win rate's so high, I feel comfortable taking trades like that. So that's basically how I do it. But in a lot of situations, you can probably just let it run to full TP. Like I'm starting to just letting them run because the SR strategy works so well and the win rate's so high, where I'm okay with just eating the losses sometimes and just letting the trades run. So it's really up to you how you want to apply it. But for me, that's how I do it. I run two different, like two separate positions at once.
All right. So my thing is also my final question too. What is like so like you take a trade, right? So even right there, you see how it swung down and hit your GP, right?
Yeah.
Say that was something that obviously you had to take profit, you had a thing. But what if it was something where you were like, you know what, say this trade, I'm gonna scale in my stop loss, or I'm just gonna, you know, you want to hold it and take it for how market, like however far it's gonna drop. At what point would you say, okay, you know what, it is what it is, I'm taking my profits at this point? Would it just be like the half mark? Is there a certain confirmation of like a pullback, like to a certain point that you allow? You know what I'm trying to say?
Oh, so you're asking like when am I like comfortable with taking profit?
Yes. Yeah. Like at what point? Because sometimes like I'll look and I'll be like, you know what, I'm gonna take profit now. And sometimes I feel like they obviously it's not, but as soon as I take profit, boom, it shoots up like another 30 pips, and I'm like, are you serious? It happens almost every time.
Yeah, there's so it's kind of hard for me to explain how I do it, but for me personally, you know, I stare at the charts like every day, so I can see patterns like just by looking at the chart. So like for something like this right here, if I see this dropping this far, this is already going to indicate to me that it's gonna swing back up, because normally it doesn't drop for that long. Like from right here, it's had a strong push down for like nearly 300 pips, right? There's usually like a threshold where it pushes it down far enough and then it ends up swinging right back up. So if it got to this point right here and I wanted to continue trailing down, I would just move my stop loss to the you know, the full TP, and then I would just trail it down a little lower. But it's something that you kind of develop over time, because it's not something that you kind of really like learn from me teaching you. It's something that you kind of, if you just stare at the charts long enough, you'll be able to see like how patterns work. Like same with like right here, you can see how price went from this point, let's see, from this buy signal all the way up to here. And then like I mentioned, you know, 300 is probably like the threshold for certain pairs like GJ. 300 is like the threshold, right? Hits 300, and then once it hits 300, it ends up coming like right back down. So I usually try to just map it, and I try to see how far it's moved from like the entry. And if it's moved like 300 pips, odds are it's probably going to reverse on you or swing back at some point. So like right here, you can see it ends up coming right back down. So instead of like, you know, throwing away these profits right here, I would have moved your stop loss like up in profit. But it's something that you just develop over time. It's not something that you kind of just pick up or something that you necessarily look for with patterns. Because if you were looking at this right here, I mean, and if I took off these zones over here, there's no real indication that it's going to reverse on you, right? It just looks like a normal bullish move. It looks like it's going to continue up further. But since we have the zones there, this would be an extra confirmation that, hey, it's probably going to reverse on you. So that's one thing that you can use as well. You can use the zones to see where price is likely to reject from. Or you can use like the threshold to see like, you know, how far price has moved before, you know, it might end up reversing on you. The same situation right here, we had a sell signal, and then it comes down to this point for about 300 pips, same thing, sweet spot about 300 pips. and then it rejects off the structure and swings up. So,
But like,
yeah,
real quick, you see that like that green one you have right there at the end, right?
this one here.
Yes, the last green candle, right? You see how it started rejecting back underneath that structure?
Yeah.
So okay. So say the next candle, right? Say it closes right there, and the next candle opens, right? And it starts to drop a little bit. You know, not obviously not below, say like a few pips, nothing crazy. So that would normally give the average person an indication. All right, you know what? Here comes the reversal. There was a rejection there, right? And now the next candle is coming down. But if that candle, like, what I'm trying to say is, how do you, what gives you that identification between just like a trend pullback versus a reversal? Because say it closes small, red, and you're thinking, all right, you know, like, do you wait for that one candle, the next candle to close red, and then say, okay, you know what, that's probably going to reverse? But what if that following candle opens, turns green, and it breaks structure? When you already like, all right, I'm gonna take a sell here because I see a confirmation. You know what I mean?
Yeah, no, gotcha. So let me pull up a clean chart real quick. It's kind of hard to see with these zones right here. So I'm gonna go to let me go back to that 4 hour, and I'm just gonna go back to that same drop that we were just looking at. So I can so here's gonna be an even easier way for you to identify when a reversal is going to be coming. So let me see. I think that entry was somewhere around 21. Just trying to find that drop that we were just looking at. Let me move this forward real quick. So we were looking at, oh, here we go. Okay. So this drop happened around October 23rd. So I go over to October 23rd over here. An easier way to do it is to just use the K²SRs. So like what I recommend doing is drawing these zones. So like basically this is the trade that we took earlier that we were talking about for like 120 pips or something like that. So this is the one that we were looking at, and you're asking, you know, when would be a good time for you to you know, possibly take profit. So just looking at this right here, what I would do is I would turn on the K²SRs and then make sure there's like no zones around that area, because the zones are going to be the biggest indicator for when price is likely to reject on you. So you can see right here, we have a zone down here. And if I hide this and then rewind from this point, so we took this buy signal right here, right? I mean the sell signal. So we take the sell signal, we're writing this down to full TP, and then you're trying to figure out when should you pull out of the trade. You can see right here that price tried to break the structure, but then it pulled back. So at that point, this would probably be a good indication that price is likely to, you know, reject right off it. So that's when I would get out of this trade. And then if price was to close right below it, like if it came back down and closed below it, then I would just re-enter the trade at that point right here. It's basically just reapplying the same strategy that we used to enter this trade over here. So like for this right here.
Okay. So then you get out if it goes back, but then if it breaks structure and closes below structure, you re-enter.
Exactly. That's a K²SR strategy. That's the same strategy that we've been applying for like pretty much all these entries here. Like price break the structure, and then you take that trade. So that's basically what it is. Like, you know, you take your profit, you wait for the next entry, and then you do it again.
Gotcha. All right.
Hey, what do you do when it's in an area where there are no structures?
So I usually go on the higher time frame. So like say right here, because that happens a lot of times too. So like right here, we have structures. I'm trying to find an area where there's possibly like no.
I forget what pair I was looking at earlier in the week, but it was like maybe they didn't update, but there weren't really many structures.
Like this right here, right?
Yeah. This is probably what I was looking at.
Yeah, so something like this right here. When there's no structure right there, I'll just draw something right here because this would be the highest one. I would just go on the higher time frame, because basically what happens here is when you back up to this point, there just hasn't been any structure that's been created here, because, you know, price hasn't been in this area for, let's see, since August. So the last time price was anywhere up here, it was like way back in August. You can always change your settings here, but instead of changing your settings, because you only go back 100 candles back. So if you want to go back 100 candles, it only pulls data 100 candles. So it only pulls
I didn't
data
know that.
right here. Yeah, so it only goes up 100 candles. So this is how much data it's pulling since since price hasn't been past this area since way back here, it's not going to pull any zones from there. So you can always just change it here if you really wanted to, but I think 100 is fine because you're not really trading, you know, like months ahead. Like if you're swing trading like weeks or months ahead of time, then you would want to have, you know, a higher time frame. But since you're only trading intraday, you're fine with these zones here. And then in order to get the higher zones, because obviously you want to know where the rejection points are, you just go on the higher time frame. So right here we're on the 4 hour, and then we'll go on the 8 hour, and then you can see the zones are right there.
Oh, okay.
So there's the rejection point right there. You just go back to the 4 hour right here, hide the indicator, and then that's how you'll know that, you know, a rejection is probably coming at this point. So you'd probably just be waiting for a sell signal to catch that rejection. Or you can catch it even higher right here. So like right here, it actually broke the structure. So that's why I wouldn't take a sell just because we have this, you know, rejection point off here. Because, you know, like we mentioned earlier, you know, some traders, they probably see this as a huge double top, right? Because there's a rejection off this point and then a rejection off this point. But usually what happens is the opposite. So we wait for price to break the structure and it breaks it right there. So instead of taking this sell, we could go ahead and just take another buy.
See, that right there is perfect.
Right over here. So you break that structure. Yeah, so this is exactly what we were just talking about, Billy. So basically you would take like, you know, a buy from this point.
Yeah.
Pretty much ride this up right there. You exit at this structure. You make 100 pips. You wait for it to break again. Next structure up here. And then there you go for another buy right over here. You let that run. And there you go, full TP.
See, that's perfect because once that retraced back, I would have gotten out, right? Like, oh, it's rejected. I'm getting out. But then once it shoot up, I'd be like, are you serious? You know?
And you hop right back in. Yeah, exactly. Just hop right back in, do the same thing over and over again.
Yeah, that's that psychology, man.
Yeah, the thing with trading, dude, is like it's actually really easy if you have like an actual strategy that works. You know, the thing with a lot of people is they keep going from strategy to strategy and they never really master it. Most of the time, all strategies work at some point. It's just, you know, like continuing to apply it even when it doesn't work. But if you find something like what we've been doing here, like I try to keep it as simple as possible, it actually works like more times than people would imagine. Like this is the only strategy that I've been using for all of the Forex signals for like the whole year. And we've had like a crazy, you know, win rate just applying one strategy pretty much all year round. So
I read that in a book. Like, I swear, they said exactly what you just said.
oh yeah,
They're
exactly.
like, yeah, they're like, you know, if you're not doing good, don't just switch up your strategy because then you're going to continue to.
You just go in a cycle because you go from one strategy, it stops working, you're like, oh, this doesn't work anymore. And then you switch to another one, it works for like a couple of days, and you're like, this doesn't work. And you just keep going from strategy to strategy. Because I've been in that cycle before, bro. Like I've been in a cycle where I went from strategy to strategy like almost every week. And it came to a point where I was like, damn, I keep losing money, bro. Maybe this shit's not for me. And, you know, thankfully I stuck around. Because the thing with a lot of strategies is they all work. You just got to make small adjustments to make them better. Because usually there's like one little thing that's like wrong with it. Like your risk management might be off, your stop loss might be too tight, or your target might be too far out. So that's pretty much how I developed these strategies. Like everything was kind of based off the original strategy. And then I kind of branched off into these other ones when I started creating these, you know, these other indicators. Because I try to figure out, like whenever a strategy stops working, I try to figure out what can I do next to make it better. Kind of similar with the US 30 strategy, right? Like our US 30 strategy has a pretty high win rate right here. But I wanted to make it better. So that's when I figured out that little pattern where the signal, if it's higher than the other one, it kind of gives you an extra confirmation.
Can I ask you something? Were all the wins on the US 30, were they tested also, like where even though you won, were every one of those buys or the sells in confluence with that new strategy when they were winning?
Yeah, they worked out perfectly. So if I go back, that's what I did last night too. I was looking at like from the so we'll go from like December entries over here. So basically like December 1st, or I guess the 30th over here, this would have been the entry for the first day of that month. Was it the 30th? Or not, it was the first actually. Yeah, because I went back to see if it actually worked with the other ones as well. And not all of them applied, but most of them did. So like, for example, right here, so 6:30 on this day, this would have been the first signal after 6:30. So like with this right here, we take a short position. And then if we add that new strategy or that new confirmation that I just discussed, looking at the previous signal right here, we would have taken the sell signal, and then looking at the previous buy right here, the low was right here, and the sell signal crossed below right here. So it qualified as, perfect entry right there. So that was a good one. And then I think the second as well. Let's see, where's the second at? Right here. Yeah, same situation again right here. We took this buy position, and then from this one over here, the previous signal was right over here for that high. So clearly right here, the buy signal crossed it. So it would have filled that requirement as well. So it's worked with all the other signals as well. It's just an extra confirmation that it helps us avoid these little fake out trades that we get for these like few losses that we had. I guess it's not completely necessary to, add that to it. But if you want to be like 100% sure, I guess it would. I haven't tested all the entries yet, but I did test December and they all line up pretty much the same. So I think it's definitely a good addition to add to the strategy for the most part. Because for me, I'd rather have more wins and less losses rather than having a bunch of wins and then also like a bunch of losses, because it ends up balancing out like at the end of the month, the week, the year eventually. So I think it works perfectly fine. But we'll see. I'm definitely going to be implementing it, but we also have to just go with it, because we're not sure if this is something that's going to stick around forever or if it's just because if it ends up limiting our trades like next year, like say if we get too careful, that's why I try to keep the requirements to like a bare minimum, because if we add too many requirements, we might be missing some trades. So for my back test, it was beneficial because one thing that I also noticed was like for the 7th right here, like I was discussing with you guys earlier. Let's go back to this. So if I go back to the 7th over here, generally what we do is we ignore the invalid signals, right? So normally we wouldn't ignore this signal right here, but then from that strategy that I was discussing, we wouldn't ignore these signals. We would just put our sell stop at the low of that candle. So instead of ignoring this entire trade, we would change it up a little bit, and then it would actually add more wins to our trades if we end up applying it that way. But I haven't really tested it enough yet. I literally just thought of this yesterday, guys. I was just like too hyped, so I had to let you guys know, because I was like, man, this like actually works, and it was freaking me out because I was like, dude, this is like a lot. This is money, bro. Like, it's crazy how much we could be making if we apply this not just with US 30, but with like a bunch of other pairs as well. So I'm still doing a bunch of testing, but I'm gonna figure out what works and what doesn't. Obviously, it's gonna take some time, because what I'm trying to find are issues with the strategy. Like, I'm not trying to of course we're like excited right now because we see it working, but the main goal with like back testing is to figure out where it doesn't work so that I can make changes from that point. But from my testing now, it doesn't really seem like there's that many issues with it. So it's just going to take time. Over time, it's just going to it'll just get better and better. Just pretty much how all the other K2 strategies work as well. Like, the original strategy wasn't perfect, and then that's how I started implementing these other indicators that help solve that problem.
That's awesome.
Yeah, dude, next year's gonna be fucking sick, man. I'm excited, bro.
I can't wait. I got extra 10 days on my FTMO, so
nice. Yeah,
definitely gonna try to get that.
Exactly. And then now that we have that extra confirmation, you should probably be pretty good, bouncing back from where you currently are with your FTMO. It's just a matter of time. And the problem with this too, like this week is just weird because it's a holiday week. This normally happens. Like, if you go back and look at the data, the week was weird here too during Thanksgiving, right? So we didn't take these trades on Thanksgiving, but if we did trade on Thanksgiving and Black Friday, we would have lost some money off these trades. So most of the time it just has to do with the time, because since it's a holiday week, volatility is low, And, most of these banks and stuff aren't even trading. So like, because they take, an early vacation off for the holidays, and the weird movements in the market are like caused by, other factors, not necessarily the banks and institutions pushing price in a direction. So.
Hey, I don't know if it's a dumb question, but how do they move US 30?
How do the banks move it? Or
Yeah. Because
so
isn't it a combination of the top 30 stocks?
yeah, but you can buy the index as well. So this is actually an index. So like how this price is like 30,000. It's like the cost for the whole index. So it's like a mutual fund where you can just buy into it as a whole, not
okay.
stocks. So the individual stocks do affect it as well, because obviously if the stock's going up, the index is going to go up as well. But yeah, if you wanted to buy the whole index, you have to buy like per share is going to be like 30,000. So obviously
it's kind of separate. It's separate from the stocks, kind of almost, right?
Exactly. Yeah. It's separate from the stocks, but then when the stocks go up, it affects it as well, because if the stocks are going up, people are going to buy into the index. So it just really depends. It really varies, because like right now we're talking about like the US 30, and then if you look at like the German DAX, it's kind of similar too, because it's the DAX 30, but it's like the German index. So they all kind of like are intertwined in one way or another. Because if you look at the DAX, I don't know, have you looked at the DAX before?
No.
So if you look at the DAX, they move exactly the same. I'm not sure if it's the same stocks that are in it, but it seems like it. Let's see, DAX.
Oh, does this strategy work for S&P 500?
Oh, the new one? Or are you talking about the US 30
Just in general, just the US 30 strategy.
I don't know, because I haven't tested it. Like the strategy was specifically for US 30, but like a lot of people have been using it for the UK 100, which is like the counterpart to NASDAQ. So it probably does work, but I personally haven't tested it, so I can't say exactly if it does or not. But for the most part, I think it probably would. Let me pull up S&P right here. So we got S&P. I'm gonna pull up like the most recent entry, see if it would have played out. Or actually, I should go from the beginning, because I already know that the beginning days work hit for US 30. So like we'll go back to like December 1st, and we'll see if it works. Like a lot of people ask that too for S&P. The reason why I don't do S&P is because I already trade US 30, and it just wouldn't make sense for me to go to trade both, since the US 30 is worth more. But let me see. So if I go to 630 over here, yeah, it looks like it would have worked for S&P as well. So here's the first signal right there, and it looks like it hits full TP. So it looks like it's good for right there on November 30th. And then if we go to December 1st over here, 630. This one looks like it hit stop loss. I don't know if it hit stop loss for us. Let me check. No, it hit TP for us. So maybe it doesn't have the same effect for every entry, because the S&P is it's a different index, because it has 500 stocks compared to like the 30 stocks for US 30. So it doesn't move necessarily like exactly the same. Maybe on the bigger time frame it does, but on the shorter time frame it probably isn't as on point. But let me check here for December 2nd, 630. I mean, overall it looks like it does work, but you're probably going to run into some road bumps here, because these trades all hit for US 30, but I'm not sure if they all hit for S&P. Let's see, 630 right here. Oh, you know what? I'm on the wrong data set, because I'm using Wanda. Let me go back to SP 500. I'm trying to figure out what the S&P. There we go. This might be better. I'm not sure which data you guys use, but I recommend using currency.com. Wanda usually gives a lot of false signals. Their data set's been kind of off, so I wouldn't recommend using them. But looking at currency.com right here, I'm just gonna run through these really quick just to see if they actually hit. So the 30th, that hit right there. The first, actually it's the same thing. So it's the same thing that would have lost, but then the next one would have hit. Let's see, 630. Yeah, that would hit full TP on the third. Let's see. This would have hit, looks like. This would hit full TP. The fourth. This looks like it should have hit, or maybe not. This would hit stop loss. Fifth, I think that's about it. Yeah, and then it's the weekend. So yeah, looking at this right here, it looks like the S&P didn't have the as good results. It looks like it had a loss on the second, or no, on the first, and then on the fourth. So looking at the US 30 over here, all of those days would have hit full TP. So I wouldn't port the same exact strategy over to S&P. You know, it could probably be used, but it's probably not going to be as accurate, and there might be some changes that might need to be made. Maybe use that actually wouldn't even, this still would have lost regardless. I'm not sure if anything happened on the first. You know if anything was going on? Not sure.
On the first?
Yeah, I don't think so, right? Yeah, nothing.
Yeah, I don't think so.
Yeah, that's weird because it dropped right here on the first. And if I go to US 30, if I go back to the first over here, there we go.
First, manufacturing PMI and Federal Powell testified on the first at 11 a.m.
Oh, okay, that probably affected it because the that specific news might have affected the S&P because it has more stocks in it, like more, you know, different assets that were probably directly affected versus, you know, US 30, which only has like 30 other specific stocks in them. So that's why I wouldn't match them up, because the thing with S&P is like they could have like a couple stocks there that could be tanking or going really high, and then it'll make you go opposite of US 30 for like X amount of time, but just enough to stop you out. Like for right here, there was no buy signal, we had a sell signal. So this would have hit full TP, but if you applied the same thing on S&P, it wouldn't have been the same thing. So I probably wouldn't use the same strategy for S&P. You probably could, but I just wouldn't recommend it until like you've done your own back test. Because like if you really want to use it, you can just go on S&P and then just back test every trade. Like what I do is I set up a spreadsheet here. I put every date there, and then I go and I back test it just to see, you know, what hits, what doesn't. And then what I do is I go back to the ones that didn't hit, and I try to figure out what can be changed. Like maybe it should be a different starting time, or it should be, you know, maybe different stop loss should be used. But the other guys that use the same strategy for UK 100 as well. Like me, I use 1,500 pips. For them, they use like 200 and 500 pips. Like their risk to reward is like a little bit different, but it works for their strategy. So it probably does work for S&P, but there's probably just some changes that need to be made to you know, make it actually be as profitable as US 31. Let's see. Yeah, I think that's it for that one. Let's see.
For your FTMO account, what lots do you use? Because you said you opened up 2 of them, right?
Yeah. So for all the 100K accounts, I use 15 lots. That'd be for the each of my 100K accounts. If you're using like a 50K, then you just use half of that. So instead of 15, you probably use like 7.5.
You're running 2 twin 15s?
Yeah. So I have 2 different accounts. Yeah, two different accounts. So like it's like double profit or double loss if I end up having a loss.
For the
But
Forex pairs though, not for the US 30 use 15, but what about like if you were to trade like GJ?
you'd have to use a position size calculator because depending on your account, you want to make sure that you focus on the risk percentage. Because for me, I already know the risk percentage for US 30. It's always going to be about about a 3% risk per trade. So the daily max loss is like was it 5%? So in order to trade something like GJ, you would have to figure out what's like 3% of that. So if you have like a 100K account and you're risking like 3% or even less, you probably want to risk like 2.5 because 3 still is pushing it. And then depending on where your stop loss is, I don't know, your stop loss might be like 100 pips or something. If you want to do that, you just go on here. You can either use baby pips or there's another app called Stenu that a lot of people use. Let me get the price for GJ real quick. 140. Let's do 140. Yeah, so right here, you would take a 3.5 standard lot. So obviously if your account goes up and you have like 110,000, your lot size is going to change. So if you grow your account, you're already at 110K, your lot size will go from like 3.5 to like 3.85. And then vice versa, if your account, goes below and you're doing like 95,000, your lot size would probably be about a 3.3. So it looks like it's about a 3%, like around a standard lot of 3, but it would just depend on, your account size and then also what your risk is as well. For Forex, I'd recommend just using 1% actually, because you don't want to go overboard because that's what happens with a lot of people. They go overboard, they take too big of a risk, and then they hold that trade till the next day. And then if you hold that to the next day, your loss is stacked. So if you're down like 2,000 or 2,500, and then you don't close that position the next day, and you open another position, and then you're down another 2,000, you're like really close to hitting that max daily loss. So that's why I personally stick with just US 30 because I understand the risk, and I'm usually in and out of that trade within that day, versus using Forex, and you're holding this trade for like a couple of days, and then your losses are just stacking on top of each other, and then last thing you get a message from FTMO telling that you failed. So that's why I personally don't trade Forex at all on FTMO. I just stick with US 30 so that I know what my risk is at all times.
Right. Billy just texted me saying he's muted.
Oh, there you go, Billy.
I'm sorry, it's my phone.
I think you got disconnected or
I'm
something.
that one, but it's gonna happen. Sorry.
It's all good. Yeah, dude. Is there anything else you guys wanted to cover?
I'm good for now. Till the next session.
Yeah, dude, definitely.
We need some wins so we can get above 100K again.
We'll get there.
Oh, 100K. Yeah, are all you guys doing the FTMO right now, or is it just Joey?
No, we all are. I opened up another one, but it started yesterday with that. Just the one loss.
Oh,
that doesn't matter because it's only at like 97.5 or something like that.
Gosh, yeah, you should be good. I'd probably just be careful. I think probably for the rest of the year, maybe just take a smaller lot size, like maybe a 10 lot instead of 15, because the market's just gonna move weird from now until New Year's because the volatility and liquidity is just down since most banks are gonna be closed. I think Thursday, Christmas Eve tomorrow. I think the banks institutions aren't going to be trading on the 24th or 25th. And then again, next week, we got New Year's Eve. So they're probably going to be closed on like Thursday and Friday as well, or like the entire week. So
I was going to come back and just start trading in January.
Yeah. I mean, that might be
10 extra days.
Exactly. That might be the best option because you guys don't want to take, risky trades or trades that aren't really worth taking because it's gonna, it'll affect your trade. And you don't want to you don't want to eat losses now when you could be, just protecting your account and then pretty much just waiting for the market to pick back up next week or not next week, the week after.
One real quick question.
Yeah.
I know you've been paid out by FTMO. How does the taxes work?
So for me, it's a little different because I run my profits through a business. So like I have an LLC that's basically I just run all my profits through from FTMO. So for me, I don't like normally if you're trading a normal trading account, you have to pay like capital gains, right? Because you have to pay the percentage off, profits that you take. But for FTMO, they pay you as an invoice. So it's kind of like doing a service. So like say if I have like a trading consultation service and then I'm getting paid through FTMO for, consultation, it's not going to be capital gains. It's going to be taxed as like self-employment profit. So it's a little you'd have to talk to your like whoever does your taxes because they're going to know what's best for your situation. Because I don't know, like if you have any other investments, if you have any other businesses, if you have any other deductions that you can add on to it. But what I do recommend is like once you do start making like consistent profit, especially from FTMO, start a business and then just run the profits through there. Because then in that situation, you can write off a lot of stuff. Like you can go buy a Ferrari and then write that off as your business card, pretty much. So there's a lot of different things that you can do to offset your taxes. It just really depends on how you do it. But I would definitely get someone that specializes or someone that knows, about these type of taxes to help you with that. Because it's really going to depend on your tax situation. Because if you have, like say if you have kids, if you have kids and then you add them to your business as like employees, whatever, doing your books or whatever, then that'll count like as a deduction as well. So like instead of you paying taxes, those get deducted and then you end up not paying taxes at all. And then your kid
All right, so I got 3 employees then.
Yeah. No, for sure. Like, for me too, I have employees like my mom, my dad, stuff like that. They help with like basic stuff, admin stuff, shit like that. And then I pay them a salary and that salary gets written off. So instead of me paying taxes, I basically just pay my parents, So there's a lot of ways around it. It gets more complex as you go. But the more money you make, the more problems you get with taxes. So it's just gonna really depend on how you approach it. Because if you're doing it from an individual standpoint, then you're gonna pay a lot of taxes on it. But if you do it through a business, you're not gonna pay as much taxes because you're gonna have all these other deductions on the side. So it just really depends on your situation.
I think it's income. If you're just doing it for your person, it just goes on top of whatever income you make.
Exactly. Yeah. So if you do that, you're gonna have to pay a self-employment tax, which is like 50%. So that's a big tax, compared to a business. So if you're doing it through a business and then you get taxed as an S corp, then like that's how I'm doing it. I have an LLC, it's taxed as an S corp. I'm the CEO of the company. I pay myself a wage, so my wage gets written off as a tax deduction. And instead of me paying the self-employment tax, I'm paying taxes through my employee payroll. So that's how I get to save more money off my taxes. So it just really depends on your situation. Like I mentioned, it really depends on how your tax guy sets it up. Just make sure that you find someone that actually knows what they're doing. Like don't go to like no H&R Block or something like that. They're gonna fuck your shit up, bro, for sure. Like you got to go to someone that knows about these business taxes. You can't go to like some like cheap tax guy. Like for me, I pay my tax guy a lot, but I pay him a lot because he saves me a lot of money. It's cheaper for me to pay him more than to me have to pay, a lot of taxes. So
yeah,
you got to think how the rich think, bro. That's the only way.
Like, should it just be like, could it be any business you can kind of finagle at, like buying T-shirts, create an LLC and sell, you know what I mean? Something stupid like that, like, or has to be a legitimate.
Yeah. How do you run your money through your business from FTMO?
So my business is it's like basically like K², like K², I have my subscriptions and stuff, right? Everything's kind of into like one nucleus. Like we have my profits that come in from subscriptions, my profits that come in from my personal trading account, or I guess my personal trading account to business account as well. So I have all these different profits coming in from, other different streams, and then I just run it through the business because FTMO is technically related to business because I'm basically giving like my trading expertise to FTMO for them to make money off their accounts, and then they pay me an invoice.
Oh, they're like you're like their consultant, right? Is that how you're looking at it? Yeah. Okay.
Exactly. So I mean, there's different ways to do it. If you want to do a T-shirt business like that, you can do like Billy's Investments or whatever, and then you'll have you know, one stream of your investments is that t-shirt business that you're doing. And then, you know, on top of that, you have that tied into your trading business as well. So there's different ways to do it. I mean, you know, I don't know anything about taxes like in detail, but once you get like a good tax guy, he's going to give you all these ideas like, hey, like you want to do a t-shirt business, you can do like one business as a t-shirt business. And then you have this other business that's your trading business. And then you have a third business that's like the umbrella of it. So there's different entities that you can connect to it so that you can, you know, basically create like a roadblock, or I mean, not a roadblock, like a road plan to like where your profits go. Like you could get money and it gets sent to like your holdings company. And then from there, it could go down to your t-shirt business. And then from there, it could go down to your trading business and et cetera. So there's a lot of different ways to do it. I personally don't know myself because I let the specialists do it. I don't want to go and make any mistakes, have the IRS up my ass every year.
That'd be it, man. They'd shut you down.
Exactly. Yeah. 100%. So that's like one way to do it. There's a lot of ways to do it, but obviously, you know, if you talk to someone that knows how they're doing it, they'll hook you up basically.
Gotcha. I appreciate it. Definitely.
Yeah, definitely, bro. Like once you start making a lot of money through like not just FTMO, but your own trading account, it opens up like a ton of opportunity. Like for myself, like now I'm making more from trading, like especially from FTMO, then I'm starting to funnel that into like other businesses. Like I'm trying to open it into like real estate stuff, and then also like a couple little wholesale stores I'm trying to open online. So I'm just like, man, it's like my wealth building here, bro. Like this year and next year, you know, trading blew up for me, and then now I just need to find places to keep growing it for the most part.
Gotcha. So when that money comes in, it's just basically like, say, like you said, like a wholesale company. So when you get paid by FTMO, it funnels down and as if you sold something off your wholesale.
No. So those profits would come through my specific my holdings company, which is connected to trading. So you could have separate companies, but then you can be in, like, say you have money from one company, like your trading company, right? And then you can reinvest that company into another company as like another venture, and then it just gets circulated around basically.
Oh, that's all right. I got you.
Yeah. So there's different ways to do it, but you definitely shouldn't like mix business. Like you should have separate entities for each thing, because the thing is, if you get caught into some shit with like one business and then someone wants to sue you for that, you know, they can't go and like dig their hands in your other business basically.
Gotcha.
So you kind of want to keep everything separate. Like say you have a wholesale t-shirt store, right? And then someone's like, oh, this guy stole my shit. Like he's been infringing on he stole my t-shirt designs. And they try to sue that company. They can't get to your FTMO company because that company's it's a totally separate entity. So.
Gotcha. Yeah. What I was trying to get at is like, say I make this t-shirt company, right?
Mm-hmm.
And I don't sell not one t-shirt, but I have 10,000 a month coming in from FTMO. Would they be like, where are you guys coming from?
Oh, that sounds shady already.
Yeah, no, exactly.
That's what I mean. Like that's what I'm trying to figure it out.
Yeah, like you can't really do that. I mean, you could do that, but you shouldn't be like, you're not really funneling the money through it. Like basically, you're using your FTMO money to buy the t-shirts for the other company, but nobody's buying your shit from the t-shirt company, so it's just sitting there, right? That's kind of what you're trying to say.
Yes.
Yeah, you can do that, and then at the end of the year, you just report losses.
But then my bank account says that I made 200K. You see what I mean? Like.
Yeah. Well, that's why you'll have to get your accountant, like to clean everything up for you. Cause it like,
okay.
Even though you're transferring money from, you know, one company to another company, there still has to be a paper trail. Cause when the IRS comes and audits you, like say for that t-shirt company, like, hey bro, where the fuck did this money come from? You know, they're going to go pull up your bank statements and they're like, oh, okay, this money came from this company. He was investing it into this t-shirt company cause he was like trying to blow this up, but it didn't work out. So then at that point you can just close that company, send your money back to the trading company, and then start another company of, you know, whatever else you're trying to start.
Gotcha.
Yeah. I mean, it sounds a little complicated, but in reality, it's not really that much. It's basically just you starting a company, being successful, and then funneling that into another company that you want to keep growing. And then you just keep, you know, funneling that into this company, that company, that company, until, you know, you create your little empire.
Okay. Gotcha.
Yeah,
I'm
dude.
a lot of questions.
Yeah, no, for sure. Yeah. Yeah, if you guys have any other questions, feel free to let me know. Otherwise, I think I have another session coming up at 6. So I'm probably gonna have to get off soon just to prepare for that one.
No, I appreciate you, man. Definitely.
Yeah, dude, definitely.
Awesome.
You got any other questions? What about Kyle? Is he still here? I think he's still here.
He's probably sleeping.
No, I'm still here. I
Oh,
muted
there he
because the young ones running around being loud.
Oh,
All right, cool. Yeah. So yeah, you guys have any other questions, or we done for the night?
I'm good.
yeah, I'm good.
Yeah, that's it.
I appreciate you, man.
Yeah, definitely, bro. Yeah, if
Yeah,
you guys have
thanks.
other questions, we'll have another session. I'm sure you guys will run into some stuff when you guys start practicing more. Yeah, especially you, Joey. I'm sure you're gonna run into some stuff because now that you got this new little trick up your sleeve, you're probably gonna
Oh yeah, dude.
try to
I'm
figure
already.
something out.
I'm already.
He's taking 10 trades tonight.
No, I'm gonna be studying though. I'm gonna be studying and applying it.
No,
Yeah,
I hear you.
definitely, 100%.
Yo, stop moving that stop loss, man.
Exactly, right?
For real.
I was like, man. Oh man. But nah, like they said, I appreciate you until next session. But definitely. I'm gonna definitely do that's, to be honest, I'm at work, but it's slowed down. I'm actually gonna go inside, pull up a chart and start testing the new strategy and just keep going back.
Nice, man. Yeah, that's the key, bro. The key is just back testing because that's how I figured out all these strategies. It's more so just back testing, figuring out, where the problems arise, and then trying to figure out what you can do to change, that situation to make it, make it.
Real quick. That's what I want to ask you because I missed it. I heard you talking about it, but I missed it. As a quick question. You know how you said the false signal, right?
Mhm.
And you would create the buy limit or that sell limit so that it could do its thing, but then when it came back, it would complete that order, right?
Exactly. Yeah. So
Based off that signal. So if it's a red signal on a green candle, it would still be a sell order limit, right?
exactly. Yeah. So I think that was on the second it was on the 7th or something. I think the example is right here on December 7th. Yeah, it was right over. Yeah, it was right here. Perfect. So I'm gonna go ahead and rewind this. So for this right here, you would this would have been the entry. But if you're applying that new strategy that I was just discussing, right here, instead of entering market, because usually if you're entering and you're waiting for it to close, you could just enter a market order and you'd be in that trade already. But for this one right here, it would be a sell stop order. So if price is above the entry point, so say if the entry point's right here, this would be a sell stop. So it's going to be a pending order, but as soon as price comes down,
yeah,
it'll fill it. So right there, it's pending. And then right there, it comes down. So now you're in the trade.
Yeah.
So if price is below it, price is below it, then it'll be a sell limit. But if price is above it, then it would be a sell stop.
Yeah. All right. Yeah. Cool.
All right, cool.
Thank you.
All right, guys. So yeah, if you guys have any other questions, feel free to reach out or just hit me up on Telegram. We can set another session up at some point.
Awesome.
I appreciate it, man. Take care.